Every day, we ask Wall Street's brightest minds to share the one word they believe will describe the trading day ahead. Victoria Greene, what is your WEX word of the day?
Mine is buffeted, a little bit of a play on some of the cross currents we're getting in the market, as well as, obviously the Berkshire meeting this weekend. I think everybody should be prepared to batten the hatches, and I see a little bit more downside risk than upside risk right now. As they said at the meeting, be prepared to do more with less. That the good times are a little bit behind us. So I think everybody should be a little bit prepared for some buffeting this week.
All right, use batten the hatches. That's a naval term. We are hitting some choppy waters when it comes to the debt ceiling. Is there any place that you're recommending your clients they can kind of hide out and protect their portfolio right now?
Yeah, we like quality, dividends, boring right now. I think you want to be more defensive than offensive. I don't mind some of the mega caps because their balance sheets are quite good, but we think there are potentials that this rate hike in June might be a surprise. It's on the table for us. We have to see what the data has to say, but I don't think you want to be chasing right now. We've never had a market that, number one, bottoms out before the rate cuts happen, and the number two isn't led by small caps and EM, which right now small caps and EM are really, really struggling for foothold. So I think you just want to stay boring. As Buffett said, cash isn't trash, cash is king. And so make sure you're diversified and you're patient, again, to play on the Buffett quotes. He talked about the best time is when there's opportunities because somebody else is doing something dumb. So as you're looking at investing right now, try not to be the dumb person losing to Warren Buffett.
Yeah, I mean, when somebody that bright says a lot of people are doing some dumb stuff, think long term and you'll beat them out, hard to ignore that. One of the things that Buffett talked about was energy. He was still very bullish on energy, even though he didn't have any plans to take over Occidental. What's your take on energy right now? Obviously, we're seeing a bit of a boost when it comes to the oil market this morning. WTI back above $70 a barrel.
Yeah, WTI has been range bound between 70 and 80 now for like 4 or 5 months. We've had a couple breakdowns or breakouts that haven't been able to be sustained. We're in this push-pull between very constrained supply, but the demand picture is very murky with how quickly is China coming back online, as well as what a recession could do to oil demand. So I do think we saw some bright spots. Your integrated oils, your Exxon, Chevrons, and your Conocos of the world did quite well, but they relied a lot on their refining. So I think a pure play like an Oxy or a Devon that's reporting this afternoon are a little bit at risk depending on their hedges. I do know all the Oxy shareholders were very disappointed Warren's not taking over, but he still likes that stock and has a strong position, and he thinks long term. So sometimes when oil's trading sideways like this, you are collecting 7 to 10% cash flow yield off of some of these E&Ps. So if you're willing to sustain some volatility and wait, there's still quite quality companies, and the balance sheets are almost pristine at this point because of what they've been doing in constrained capex.
All right, I want to talk about where you're putting money to work right now is in today. One of your picks today is Skyworks Solutions, ticker SWKS, reports after the bell. Tell me why you're so bullish on this name.
It's a great diversified chip company, and I know semis have been hit or miss. On one hand, you have on the other, you have Qualcomm. But look, they do the deals with almost all the large companies: Apple, Amazon, Samsung. Apple's one of their biggest shareholders or biggest supplier. Sorry about that. One of their biggest customers. And so when you look at them and you realize that Apple's sales were a little bit better than you realized, you think that they could do better than the expected negative 14% year-over-year reduction in earnings. So I think this company is a quality company. It's diversified. It has a little bit of a foothold in the Internet of Things. You've got industrials, you've got self-driving cars, but a lot also in the mobile. That's about 2/3 of their revenue is in the mobile sector, which really, you can't separate us from our smartphones. And Buffett talked about that. We'd rather give up our car than our smartphone, 100%.